Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about PROLOGIS INC quarterly report. PROLOGIS Inc. is the global leader in logistics real estate, offering a wide range of businesses and services to its clients. The company's portfolio includes leasing modern logistics facilities to approximately 650 customers across various industries, providing properties and development projects totaling around 1.3 billion square feet in 20 countries, serving two major categories. Business-to-business and retail/online fulfillment, these services cater to a diverse base of clients, positioning PROLOGIS as a key player in the logistics real estate market. The recent surge in PROLOGIS Inc. PLD stock price can be attributed to several key factors. The company's strong financial performance, including a 101.5% increase in net earnings per diluted share and a 19% rise in core funds from operations core FFO per diluted share for Q4 2024, has been a major contributor to the stock price growth. PROLOGIS' strategic expansion and investments have also played a significant role in driving up its stock price. The company's acquisition of German logistics facilities, expansion in Poland, and focus on data centers and energy solutions have demonstrated its commitment to expanding its portfolio and capitalizing on growing demand for digital infrastructure and clean energy. Positive analyst sentiment has also contributed to the increase in PROLOGIS' stock price. Several Wall Street analysts have maintained moderate buy or buy ratings for the company, with various price target adjustments reflecting their confidence in PROLOGIS' performance and future outlook. Overall, a combination of strong financial results, strategic expansion, and positive analyst sentiment has likely contributed to an increase in PROLOGIS' stock price over the past year. The primary drivers of revenue growth for the company are primarily attributed to rental revenues, strategic capital revenues, and development management and other revenues. Rental revenues saw an 8.6% increase in 2025 compared to 2024, driven by a $2.187 billion net investment in real estate properties. Strategic capital revenues also experienced growth, increasing from $419 million in 2024 to $439 million in 2025. Development management and other revenues followed suit with an 8.7% increase. In contrast, gains on real estate transactions declined significantly from $160 million in 2024 to $53 million in 2025. The company's financial performance indicates a consistent generation of positive operating cash flow. For the past 2 years, 2024 and 2025, the net cash provided by operating activities has been substantial, with $3,577 million in 2024 and $3,850 million in 2025. This trend suggests that the company is effectively managing its operations to produce a significant amount of cash, which can be used for various business purposes such as investments or debt repayment. The company's debt level and interest expenses have undergone significant changes. The total debt has increased by 14.1% to 14.4%, rising from $30,879,263 to $35,302,901. This increase is reflected in the interest expenses, which have risen by 18% to $741,891 in 2025 compared to $631,700 in 2024. The net interest expense also increased from $632 million in 2024 to $742 million in 2025. Regional performance overview. Our company's financial performance varied across different segments and regions. The strategic capital segment stood out, with a notable increase in net operating income, NOI, from $208 million to $244 million. In terms of revenue growth, the U.S. region performed well, increasing from $352 million to $389 million. Similarly, the Europe region saw an uptick in revenue, rising from $126 million to $141 million. However, not all regions fared as well. The other Americas region experienced a decline in revenue, dropping from $45 million to $61 million. Unfortunately, the Asia region also struggled, with revenue decreasing from $56 million to $54 million. Management is optimistic about the company's outlook, expecting strong operating results with a focus on growth and increased profitability. The primary drivers of revenue growth will be rolling in-place leases to current market rents upon lease expiration and expanding services through PROLOGIS Essentials. To achieve this, the company plans to invest significant capital into new logistics properties, expand its services, and increase assets under management. Management is confident that their differentiators will drive growth in revenues, NOI, earnings, FFO, and cash flows, ultimately creating value beyond real estate. Acquisitions and divestitures overview. The company has made significant investments in real estate properties, increasing from $91.2 million to $95 million. These acquisitions include new logistics properties, built-to-suit development, speculative development, and redevelopment of properties into industrial properties and data centers. In terms of divestitures, the company has sold non-strategic assets to third parties, contributed newly developed properties to co-investment ventures, and stabilized properties for contribution to these ventures. The company also liquidates ventures upon stabilization or liquidation of individual ventures. Notable dispositions include sales to third parties in the U.S., with gains on disposition of $5 million in 2025 and $7 million in 2024. Additionally, the company reported gains on dispositions of development properties and land, net, totaling $53 million in 2025 and $160 million in 2024. The company's financial summary reveals its dividend payment history. In 2025 and 2024, the company paid out significant amounts in dividends, totaling $2,822,772,000 and $2,677,477,000 respectively. However, there is no explicit information on share buybacks provided in the summary, although it mentions that shares have been repurchased elsewhere in the document. That concludes the financial summary for PROLOGIS INC. Feel free to comment below, and I will be happy to answer them when possible.